It's expensive to buy a house right now. Mortgage rates are at or near 7%, and home prices are still rising. There are more people looking to buy a home versus the number of people looking to sell them. So, if you're looking to buy a house, here's how you can calculate how much you can afford. You will need 5 things. You will need to know your annual income before tax, an estimate of your home insurance and property taxes, how much debt you owe, how much money you can afford to put down as your down payment, and your mortgage rate. Ideally, you don't want to spend more than 30% of your income on your mortgage. With that in mind, here's a simple formula. So let's say you make about $5,000. Deduct all your expenses, which can include your subscriptions, your auto loan payment. Let's assume that's about $1,000. What you have left is $4,000 that you can use towards your housing costs. So with that $4,000, multiply it by 0.3, and that will give you $1,200. This $1,200 is how much you can spend on your monthly mortgage payment. With a budget of $1,200 a month, based on current interest rate levels, you can likely afford a $200,000 house provided you're putting 20% down. So here are a few tips to get started on buying that house. The first one is that you should save, and save. If you know you're gonna buy a house soon, you should marshal all of your funds and save as much money as you can. You should also build a fund for any unexpected expenses that you might have to incur. If you put down 20%, you avoid paying mortgage insurance, which can cost you in the long run. And putting down more money will build your equity in your home much faster. The next tip is to improve your credit score. You will typically need a score of 620 to qualify for mortgages with most lenders, but some are willing to work with people who have lower credit scores. But it is generally a good idea to improve your credit score before you go to your lender and qualify for a mortgage, because it shows that you're a more credit-worthy borrower. A prime credit score is between 660 to 719, and a super prime credit score is between 720 and above. So pay off your debts as soon as you can and make all of your payments on time. And also try to see if you can connect your rent payment to your credit report. You can ask your landlord to connect your rent payment to your credit report through a service. And the final tip is shop around. Don't just take one lender's word for it. Freddie Mac estimates that when you shop around, you typically save between $600 to $1,200 on an annual basis. It's a hard one, and it can be a little bit annoying to keep asking people for quotes and not committing to anything, but it is worth it. It will pay off. So if you're in the thick of home buying, make sure you keep these tips in mind, use these calculations to know how much house you can afford, and happy house hunting!